Here we go.
Yay!
There
we are. All right.
Awesome. Hey, everybody. It's Kimberly Bean with the Southern Realm Real Estate Network, and my name tag's always crooked here. And Exit Landmark Realty, and I'm with Tim Murphy today of C&F Mortgage. So thanks for joining us. We do have room, Tim, if you can see there below, if we
cool.
get some comments in the box. So we
awesome.
invite everyone to join us. Today we're going to be talking a little bit about it, and why I wanted to talk to you about this is short sales. We still have a lot of people who are challenged, I think, financially, and they may be underwater with their homes, and are, I don't want to say it this way, but I do, that they're looking for a way out and to sort of start over. And so we've been talking a little bit about the short sale process,
and they're not as much of a stigma anymore.
Exactly.
You know, everybody, and I think, you know, Kim, we've talked about this before, but a lot of people don't realize that short sales, in essence, are an ability to relieve them of this liability, of some burden that's occurred. And we know that most folks, it really is some kind of economic event has occurred.
Exactly.
That's caused a distressful situation.
Whether they've got a reduction in their income, maybe they lost their job. Maybe
could be
they
health.
Exactly.
Could be a divorce.
Exactly.
So
something that's sort of changed and made it more difficult to maybe stay on top of the mortgage payments, and you know, people are trying to do these loan modifications and haven't always been successful at it.
And they're a nightmare. Oh,
they are.
My goodness.
They are.
Oh, yeah.
And so maybe just to start from the beginning, Tim, is I just kind of want to explain to people, because I think there are still a lot of people who don't understand what a short sale is.
Okay.
So if I would put it, the best I could explain it to someone would be, let's say that you owe $200,000 on your house. But the current market value of it, maybe it's only 150 or 125 now, because you bought it at the height of the market.
Right.
And so what a short sale does is that we put the house up for sale on the market like we would do any other house.
Correct.
But actually it would be listed at market value, so it would be below what you owe. And then that difference of what you owe to the bank and what you actually sell it for is where that term short sale comes from, right?
Correct.
We're shorting the bank.
Yep.
And basically the difference between that and a traditional sale is that we do need the bank's approval in
Correct.
order for that sale to go through. So just explain it that way to you.
And the process is kind of unique. It's not as standard. You go through the normal contract negotiations between the buyer and the seller, of course. You're negotiating price, closing help, etc. Then at that point in time, the seller is really communicating with the bank, which is really a third party. I think that's what it's called.
Yep,
actually,
exactly.
Right?
It's third party approval that we're looking for. And it's unfortunate, but it does take longer than a traditional sale. And
Timeline, what do you think?
You know what, we're usually telling people at least 3 to 6 months to be able to do that. Sometimes it does take a little bit longer. It really does depend on how the negotiation is, how quickly you can get someone, you know, in the bank, you know, that is your contact person that you can do this for. And, you know, we had the privilege of having Terry Fari with Buyer's Title on.
She's awesome.
She
I love her. She's on it.
And she, in addition to doing settlements, does do short sale negotiations.
Correct.
So for a realtor, you know, if we're really busy and have a lot of things going on, imagine the paperwork and the timeline and all this corresponding back and forth with the bank. We have somebody like Terry who negotiates it for us. So,
and Terry, you know, she's an accountant, which is awesome. She works with a law partner. So you got that legal, you got the accounting, and then you got the title.
And then she told us she's probably done about 500 short sales already.
Wow.
So they're experienced. They know what to expect. So do check out our other video here on Facebook. But we did do an interview with Terry, and she describes sort of how the short sale process works and what she needs in order, you know, from the seller to be able to start that. But
you know, one of the other things too that I think you've brought up to me in the past, you've always told me that sometimes there's not just one bank, but
there might be multiple banks involved, or especially if you have, you know,
HOAs and behind that. Sometimes water bills.
Exactly.
I mean, things that have to be
so
negotiated
many different
through.
things to consider, and that's why it's great having somebody else to be able to negotiate that for us. We can do it, but it is extremely time consuming. Right. So it's great to have somebody who's focused solely on that, has the experience, and every bank is different. So
what's the normal cost, you know, from the seller? You know, do they pay for the negotiation part? Is there an actual fee, or how does that work
Sometimes
out?
there is a fee involved, but all of that we try to build that into, you know, the settlement costs.
So that's netting out from that standpoint.
Exactly.
And then I've noticed too, sometimes you guys get walking money. What's that all about? That's kind of neat.
It is, and it's
unusual.
Happen. Exactly, it doesn't happen. Sometimes I don't like to say it because people might expect it, but it doesn't. But right. There are times where a bank will provide you with relocation money to sort
cash
of start over.
That's what I've heard.
Exactly. Yes, cash for keys, to sort of help you get into your next residence.
Correct.
Which actually brings us to a great point, and really why I wanted to talk to you today, Tim, is
I thought we were just going to have fun.
I talk to a lot of people about when they're looking for options to short sale, and almost every time the number one question I get, well, if I short sale, exactly, what is the impact? Number one, how does it affect my credit?
Sure.
How does it affect me to be able to buy a house again? Will I ever be able to buy a house again? So what would you tell those people?
Well, first of all, a short sale is by far the best resolution to a situation when you're versus a foreclosure, versus a deed in lieu of.
A deed in lieu of is when you just simply walk away,
is that when you walk away, but you signed an agreement with the bank. And ultimately, it's better than foreclosure, deed in lieu, even a bankruptcy, because a bankruptcy doesn't always resolve the ownership of the property, and that's the problem in a nutshell.
And we see a lot of that.
And in a short sale, there are several ways that it can impact you. I mean, number one, of course, if you allow your mortgage payment to get behind, that's already having incremental impacts on your credit score.
Okay.
That's everybody's afraid of what's the impact of my score. And I tell my clients, look, if you're already experiencing those late payments on the credit report from the mortgage payments, it's already having a significant impact. Getting that short sale taken care of and closed basically stops the bleeding. It stops the impact. So that's number one. Sometimes, and this is rarely it happens, but we've got clients that do a short sale and are never late on the payment.
Okay.
That's actually the better solution.
Okay.
Because if they do that, this is kind of odd, but if you're not late on your mortgage payment, and you've paid it on time, and it was due to some economic or unforeseen circumstances caused this economic disaster to occur, FHA says, hey, we'll work with you and allow you to buy in a very short period of time, short being 60 to 90 days.
Wow.
So I've had clients who've had a short sale, payments have been perfect, but due to maybe a loss of job or somebody's passed away or some event that's occurred, that they've been able to sell a house. I've got one right now in November. Perfect credit, everything's beautiful. They aren't under contract right now to settle on their new home, and they're not going from this crazy big mortgage that they had, but they're coming something that really fits their budget.
Okay.
And that's what we're looking for: stability.
Gotcha.
Are they stable in their income? Have they maintained their credit? Where are they on reserves? Have they gone through certain counseling classes, etc. So in this case, they have that ability. So what's the impact? Well, number one, we want to stop the late payments on the mortgage by completing the sale and putting an end date to the process. Number two, it is shown as a major hit on the credit. There's just no way to get around that. But there are ways to begin healing that right away.
And that's the thing I really wanted people to know, is that we understand that what they're experiencing is something that maybe not of their own fault, but getting the short sale behind them, there is a way that they can recover from this.
And we tell everybody, listen, short sale stops the action, number one. Then number two, you want to meet with, a mortgage professional who has some credit experience and background. Let's sit down and see where you're at, because it may be a matter of we need to reestablish some credit. Sometimes you need to, it's crazy, but you need 2 credit cards, you need some activity. Sometimes you need an installment loan. Sometimes we have some issues.
But you could look at their specific situation and give them the advice that they need in order to turn their credit back around.
Correct.
Okay, I'm going to back up for 1 second on something that you said. When you talked about someone who's making their payments on time through this short sale until they get it out, you specifically referenced an FHA loan.
Correct.
That's when they turn around and buy again. But is there a different effect based on what type of loan they had when they went through the short sale?
That's a very good point. So let's talk about that, number one. What happens in a short sale? Well, you've got a loss, right? And that loss has to be negotiated with the bank. And sometimes it's negotiated with the mortgage insurer. So if you had a conventional loan, you might have private mortgage insurance, PMI. Right. It might be a negotiations with a VA loan. So you had a VA loan and you lost part of your certificate of eligibility, your eligibility portion. You may have had an FHA loan. and you lost an FHA loan, you've incurred an expense by the government, if you will, the federal government, FHA. And in essence, all the federal loans, the government loans, which are FHA, VA, and of course USDA, it's possible for you to have what's called a claim, or a credit alert verification and response claim, a CAVRS claim on your credit. Now, if you have that, sometimes that can delay things by 3 years. We have found, though, the majority of short sales are conventional loans.
Okay.
Because conventional loans don't always have as many negotiating tools to help a client through the more difficult times.
Okay, awesome. So would you say that the longest period of time you could, if all the situations were right, it could be anywhere from 60 to 90 days before you buy again?
Let's talk about the timelines then.
Okay, yeah,
so,
exactly.
So let's say we did a conventional loan and we don't have a CAVRS claim, which means we don't have any kind of government claim against them. If they have a government claim, it's 3 years from the date of the claim.
Okay.
So that's kind of puts a little bit of a pocket in there. But so if they're doing if they're FHA and they've kept their payments clean and their credit is there and we can show the stability of the file and everything else makes common sense, then typically we can close that loan within 60 to 90 days. Of course, everything has to fit guidelines and so something to change.
But you know what, I guess what I want to place an emphasis on for people, and this is the human side of this whole thing, is that I want people to realize that this is not the end.
No, it's not. And I think that's the key.
Yeah, and I want them to realize you can bounce back from this and regain your credit and buy again. This is the fix for a temporary situation.
And I think that's what's really critical. When you start looking at things, it's not as bad. What's nice is it's done. It's closed. And it's just like getting through, final exams. Remember high school?
Yes.
That's a long time for me. Like 30 years ago. But my point is, you're closing the door on an event that's now finished. And honestly, so let's go through this. Let's talk about that, what we can do.
I have a question.
Oh, go ahead.
Can we
sure,
answer
by all
this?
means.
Okay. It says, are you familiar if banks will go after homeowners for deficiency after the short sale, deed in lieu, or foreclosure?
Oh, awesome question. Now,
yes,
first
great
of all,
question.
Remember, we're not attorneys and don't pretend
exactly.
to be.
We don't pretend to be one.
But we're
going to have an attorney on, though. We need to get Dave formally on here.
Phenomenal. What typically happens is this, in that negotiation process on the short sale, we're looking to negotiate the deficiency at that time. That's why I love using a professional to say, listen, here's what we're looking for. Not only do we want to negotiate the sale, but we want to negotiate the deficiency so that we can close the door. Now, in most cases, you're going to get a 1099. Remember, we're not accountants either. Which says, hey, this is the amount that
you were forgiven.
That you were forgiven because it's considered income, right? Number one. Now, in a deed in lieu, it depends on how you negotiate or who's representing you. So that's why I love having an attorney like Dave to help negotiate that deed in lieu of. And in a foreclosure, nobody negotiated, right?
Right.
So you didn't have any representation. That's why I love a short sale. You have representation.
Okay.
If you didn't have representation, then it's very possible. And there is a timeline, and I don't honestly
know what that timeline is.
I want to say it's 7 years, but I could be wrong.
It was 7 or 10 years, and I want to say that Terry mentioned that
good.
in our video. So she may have mentioned the timeline for that. So the answer to their question is, if they didn't have representation and they don't have something documented that forgave them, they could in fact come after them.
Correct. So you want to be very careful, and that's why too. And I know Dave Gormley, the gentleman we work with all the time in bankruptcies, will tell you sometimes you'll do a short sale and you'll follow it up with a bankruptcy just to close the door on any kind of deficiency that might be outstanding.
So would you recommend that she contact an attorney?
Most definitely. And if you need someone, just give Kimberly a
call. Give me a call. I can put the information in the comments section too. But that would be great. Advice would
better
be to
safe than
them.
sorry.
Yeah, and it's interesting you mentioned that about doing the bankruptcy after, because a lot of times we have the different situation.
Correct.
Where somebody has filed for bankruptcy, they've been discharged of it, but the bank never got around to foreclosing the house, and so the people think, my 7 years are up or whatever it was that they did the reorganization, or they got discharged with a Chapter 7. They want to kind of move on, and they've got this house still sitting in their name.
And that's the challenge, because most people don't realize you've done the bankruptcy, you've discharged the liability. However, what's occurring is that property, there's no emphasis now. Yeah, there's no push or drive anymore.
So a short sale does make that happen. Yeah, it gets it out of your name. Okay, we have another comment here. Also, my accountant told me the banks never lose. In a foreclosure, they first collect from the federal government, then they collect on the mortgage insurance premium, and then they get whatever they get at auction. Wow.
So you'll hear. So what happens typically? Here we are. House goes to sale. Okay, and things happen, and it goes to auction, and it goes to the courthouse steps. And if someone buys it, they set a price that the bank's agreed to take. And then the bank then has to get the negotiations and the contract approval with the courts, and then it eventually settles. It takes quite a bit of time, depending on the county and the state that you're in, number one. Number two, once that occurs, then the bank that had the loan is going to go back and seek relief, if you will, if there was mortgage insurance. Now, that mortgage insurance, remember, is typically only required if you put less than 20% down,
right,
and you're doing a USDA or VA or an FHA loan. So, depending on what kind of loan you did, you may not have mortgage insurance.
Okay.
So, typically, yes, they're going to auction us first. That fulfills the indebtedness. And then there's some other liens like IRS liens, things like that can take precedence. After the mortgage is satisfied, from that, then they do go after the PMI portion, or possibly. And then when you say government, that's basically the same. It's an FHA, VA,
okay,
USDA. It's the government.
Everybody's standing in line waiting for their
huge.
piece.
The last person is the person who owned the house. I mean, they may never get anything back from the auction sale. And what happens in a nutshell is that that's the deficiency we're talking about. That potentially could be. You could get a 1099 license. Yep.
So we did hit on the fact about the credit ramifications when you do this,
right,
but we did talk about for people that are actually making payments on time.
Payments on time. So the only, unfortunately right now, FHA seems to be the only ones that are willing to work with us.
Okay.
I will tell you, and truthfully, VA will work with us too,
okay,
because typically, VA is and that's if you were a member of the military reserve,
right,
or a surviving spouse of a veteran who gave his life on behalf of the country, or suffered some kind of debilitating illness and passed away subsequently from the military experience. What happens is VA, again, is going to look at the situation.
Okay.
Why did it occur? What happened?
So you
what
find that
caused
those
issues?
two, the FHA and the VA, are the ones that are
most reasonable,
more likely to
flexible.
work for you.
Yep.
And the FHA loan is the one that requires that you have 3.5%
down. So, and
okay,
there aren't any grants.
Okay.
So in this case, because most of the grants require a 3-year break from the time of ownership.
Okay.
That's the reason.
That's good to know, because I do know that there are some individuals who are considering doing a short sale, and
sure,
they're concerned, I can't even make the payments right now on my mortgage, and now I've got to find a house to rent while
right,
all this happens,
right,
and the security deposit and everything like that, and I may not be able to find a house I can rent for the same price as I was paying on my mortgage.
Sure.
How in the heck do I save $3?
So let's look at this here from this standpoint that, from the grant standpoint, it's a 3-year. Let's talk about all 4 really standard programs.
Okay.
So standard for VA is 2 years from a short sale.
Okay.
But of course, it can be a year depending on the circumstances and situation.
Gotcha.
And then if there's no late payments, you may have an even better ability to negotiate a short period
okay,
of time. FHA is typically 3 years.
Okay.
However, there's some really cool programs. There's what's called the Back to Work, which means if you suffered a 20% loss in income for a 6-month period prior to the short sale, okay, you have to wait 1 year. You have to take a counseling class. That's a special back to work counseling class. And if we can show return to stability and it was circumstances beyond your control, you can buy again.
Okay.
FHA, which is amazing, 3.5% down.
So when you said 20% loss of income,
so
you're not talking about like a divorce.
No, unfortunately,
okay,
divorce doesn't, unless you kill them. No, I'm not saying that. Don't do that.
He didn't say that out loud.
But yeah. So the key in a nutshell is this, is that, when we have a situation that the loss of income is a 20% reduction due to, and I've had clients who've had massive losses of hours cut back.
Okay.
They lost all their overtime, or, the company cut back hours and they went from 45 hours to 35 hours,
okay,
or maybe they changed jobs and they took a major salary hit.
Okay.
I've had people go on workman's comp and have a massive hit because of lost income there. I've had clients, lose income because, all it came down to it is they lost their job due to illness. I've had people out of work I had one recently, she had a brain tumor, had brain surgery. She was out of work for 3 months for recovery. Thank God, and she's back with us.
Right.
But the point is, there was that break of income. We have to document it with tax returns. We have to show the adjustment down. If we can document it, we follow the guidelines. We can buy again.
Okay.
So FHA, 3 years standard, possibly 1 year with a back to work, possibly 60 to 90 days if they've never had a late payment on the short sale. VA, we said 2 years.
Okay.
But depending upon the circumstances, it can be 1 or it can be none, depending upon the circumstance situation. Okay. USDA, now United States Department of Agriculture, Rural Development, phenomenal program, meant for more of our rural areas, which funny is Southern Maryland, most of it is, which is cool. USDA follows a standard, 3 year, but there are exceptions for 2 years against circumstances.
It sounds like what you're telling me is that they need to come talk to you about their specific situation, and you'll be able to better define. But that's a good range to explain.
Was it 7 years?
It wasn't 7 years, and that's what everybody always says.
Did you need 50% down? No, and
no.
There's so much misunderstanding. You might need 3.5.
Right.
I'm not going to kid you. And sometimes that's the one on forgiving grace.
Right.
But at the same time, hopefully, you've left a $3,500 payment, and now you're going to $2,500, and you're in a much better position. And the other thing too is that we'll guide you on how to budget your funds. That's important. So not only do we guide you on that credit piece, but we're going to guide you on the budget piece too, so that you can build both avenues.
Exactly.
And
I'm sure they probably are experiencing a little bit of that if they're struggling right now to do it. They don't want to go back there again.
Not at all. Yep.
Well, I'm so glad you joined me today, Tim. We love doing these things. We love educating the public, and it's so satisfying. I can't tell you guys. We've done so many short sales, and to be able to see the
successful
people,
short sales.
Successful short sales.
Oh yeah.
But to be able to see how happy the people are to put this behind us. We get calls from people that are buying their next house. I mean, it's so, stop the bleeding now.
Correct.
And move on with living the rest of your life. Consider it as an option if you're underwater or you're experiencing that hardship. Like you said, it's going to be a much better way to go to short sale versus a foreclosure or a deed in lieu walking away. And you can recover from this, and you can buy a house again. So
the biggest thing is give Kimberly a call. Talk to her about where you are in this process. I have clients come see me all the time.
Yes, and I refer a lot of people to Tim a lot just for him to explain exactly what we're talking about now. And hopefully this video will help others. We'll have it on our little archive here on Facebook. So, hopefully it's helpful information. But by all means, and then your specific situation, I send people to Tim all the time.
Yeah, and there's no cost. People sit down all the time. And
exactly.
It's funny. We've had clients. I have one right now who attended our class 2 years ago. And they're just buying. So people are doing it.
Yes.
Sometimes a little longer.
Exactly.
But it doesn't matter.
Yeah. So it can be done. So don't lose the faith.
Yep.
Hopefully you've gotten some education, and we are both available for you to give us a call and ask any questions, and help you get back onto the road to home ownership again after we get through this little piece.
Awesome. So, well, enjoy the summer.
Yes. Have a great Memorial weekend,
yes.
everybody.
We'll see you then.
We'll talk to you soon.
Thanks.